So you want to learn about stocks. Maybe you saw a Reddit post about someone turning $500 into $50,000, or more realistically, $50,000 into $500. Either way, you're here now, and that's concerning. Stocks are basically tiny pieces of a company that you can own. It's like if McDonald's was a pizza and you bought one slice, except the pizza is worth $200 billion and your slice cost you $250. Also, the pizza might lose half its value tomorrow because the CEO tweeted something weird at 3 a.m. When you buy a stock, you're hoping it goes up. Genius. I know. The strategy is simple. Buy low and sell high. This sounds easy until you realize that what's low today might be incredibly high tomorrow after the company announces they've been committing fraud for 15 years. So really, the strategy becomes buy low, panic, sell lower, watch it moon, hate yourself. People often talk about the market. The market is not a place. It's more of a collective hallucination where we all agree that certain companies are worth certain amounts based on vibes and quarterly earnings reports. Sometimes the market goes up, sometimes it goes down, and according to everyone on financial Twitter, they definitely predicted whichever one just happened. Now, you've probably heard of day trading. This is where you buy and sell stocks within the same day, trying to profit from small price movements. Studies show that 95% of day traders lose money, which makes sense because the only thing moving faster than stock prices is the speed at which your confidence turns into regret. Of course, there's also passive investing, where you buy index funds and just wait for decades. This is statistically the best strategy, which is why almost nobody does it because it's incredibly boring and you can't brag about it at parties. Yeah, I'm up 7% annually doesn't have the same ring as I made $10,000 on GameStop before losing $15,000. People also love technical analysis, which is where you look at squiggly lines on charts and try to predict the future. This is essentially astrology for finance bros. See, the stock is forming a head and shoulders pattern. It means you've been staring at charts so long you're seeing body parts. The beautiful thing about the stock market is that for every winner, there's a loser. And statistically speaking, that loser is probably you. But hey, at least you're contributing to market liquidity, which is a fancy way of saying, thank you for your sacrifice. In conclusion, should you invest in stocks? Probably yes, in a diversified portfolio over a long time horizon. Will you actually do that? No. You'll probably buy whatever Elon Musk mentioned in a tweet and check the price 47 times a day until you either get rich or delete the app. And that's stocks, casually explained.